Hey all, and welcome to the Midweek Market review. For those of you that didn't watch the Sunday Market Outlook, I would encourage you to have a look at it, as we're going to be using a lot of that analysis in our review here this morning. So essentially, we're going to start off on the dollar, and we can see that we did in fact have a very bearish dollar this week so far. And I would assume that we will just see it continue moving further down as we're moving closer and closer towards our 97 level over here that we've anticipated on Sunday. However, I did expect a bit of a pullback before the market was to drop, but ultimately the market saw it fit to kind of just roll all the way over, running all the way down to 97. So as you guys can see, that the overall analysis confirms that direction is looking to drop even further, and we're gonna have to wait and see how does the market respond to this particular level of support, and obviously take it from there. But for now, let's go on and move on to our next pair. Okay, guys, so looking at our next pair on the Australian dollar, US dollar, we can see that price has actually started giving us a very nice continuation of this overall bullish run, running all the way to our key target level of 0.7 thousand. And you guys can see that currently we're forming a little bit of a shooting star over here, and that's not too surprising, um, considering the fact that this is a relatively good strong level of resistance. Now, in my personal opinion, I would suspect that we could see a bit of a pullback, but ultimately breaking this particular level over here. If we pay very close attention, we can actually see that by the time we looked at um, this chart, which was on Sunday, the price was around this region over here, and we actually suspected that price would actually break further down and then move up. But as you guys can see, that we also anticipated a very strong break of this level, confirming um, overall momentum running to the 0.7 thousand. Um, Now, bear in mind that I'm looking for a long position on here, but I just need to see a little bit of a pullback before I can get into the particular price that I'm looking at and actually run it all the way to break 0.7 thousand resistance level. But I do definitely think that the analysis of Sunday played out really well, and the market is doing um, almost exactly what we've anticipated. So I think that is a good, it's a win for us in that aspect. It's just a case of now trying to identify opportunities of entry as the market continues its run further to the upside. So with that being said, let's go over onto our next pair. Okay, guys. So our next pair is going to be the euro dollar, and you guys can see that the euro is also run quite nicely, actually going all the way to testing its monthly pivot. And this is precisely what we were keeping our eyes um, on Sunday, which was the overall monthly pivot over here. Prices ran very, very smoothly to the upside, testing this moving average over here, lining very nicely up with a pivot. And if I was to look at the background momentum, I would suspect that the market does in fact has the capacity to break further to the upside, perhaps wanting to go and test all the way up to our 1.1400 level. Now that is a relatively good run. I wouldn't call it a swing trade, but it is considered a relatively good run. And in order for the price to get there, I would suspect that we could have a little bit of a pullback before running all the way up to that region over here. So essentially, one of the key things that I'm going to be looking for is just to see the market kind of top out, and then kind of measure the level of retracement that we could expect. And then based on that retracement level, I'll look to get in on a long, running it possibly all the way up to the 1400 resistance level. Now I can go ahead and use the 1448 level or the 1450 level, which will definitely be within my cards to do so. However, I find that if I was to do it, I would basically split my position into two and then run half of the profit over here and take the other half off over there. Based on that, I'll be able to see how far up the market does really want to go. But for the most part, I mean, the analysis worked out really well. And as a result of that, I feel that we're definitely on the right path with regards to where the market is headed. Okay, so looking at the pound, we actually see the pound forming this very nice potential bullish engulfing candlestick pattern. Now, bear in mind that this can't yet be confirmed as a bullish engulfing candlestick pattern as the month of June just begun. However, we can reference the fact that the market is coming off a very key support zone alongside bullish divergence as well. So essentially, what we're going to do is we're going to use this as a reference to identify an opportunity to kind of run this market all the way at least to the monthly pivot. Essentially, one of the key things that also gives me confidence to see the market running this high is the fact that we had this very long tail over here, and it doesn't look like price is in any position to kind of close below this point over here, considering the fact the amount of positive momentum we have in the background. Moving forward, if we go over onto the weekly time frame, one of the things that we can see is the market is currently being stalled by this 50 period moving average over here. Now, this, in line with the fact that we have a bit of a double top, also suggests that we could enter, we could see a possible pullback, but just based on the sheer size of this candle alone, and also considering that we've broken our 50% retracement fib over here that we saw over on the daily time frame, breaking that 50% retracement fib actually suggests that we're not in any position to kind of pull all the way back and break these lows. So with that being said, I would say that although the pound itself was not one of my highest highlights on Sunday, it definitely now becomes a very interesting pair to look at, considering that we have broken the pivot. We have confirmed that the retracement is now invalid, and we are now starting to build momentum further to the upside. So, with that being said, guys, like I said, my bias for this space definitely further to the upside. If we can break these highs over here, then we're definitely in the run. But for now, I do suspect that there's the potential of pulling back just ever so slightly to ultimately run all the way up to our key resistance level of 1.29. Moving on to our next pair, the USD Canadian dollar, we can actually see that the market comes off this resistance, and this is what we highlighted on Sunday, was the fact that the market has formed a tweezer top on this key resistance level alongside the double top. Implies that we were not necessarily surprised to see the furtherance of the drop. However, I'm going to admit that moving on to the daily time frame, I anticipated a bit of a pullback towards the monthly pivot. However, we did get a bit of a pullback, but not as deep as I anticipated it would be. And this obviously caused me to take the position. I managed to close a positive trade on this, but I didn't necessarily get my second unit to run as far up as I would like to. Ultimately, I still suspect that we have some decent downside momentum, even though we're starting to test this moving average over here. I definitely see the potential of the market wanting to make further drops. And once we break this moving average, then all cards are off the table for any longs that is potentially on the horizon. Essentially, the levels that I'm looking at the market testing are these levels over here, and then also 32,000, which is going to be my first target level if the market is to break this moving average over here. So still very bearish bias on this pair. And this basically confirming the break of this key support level over here suggests that there's not really any reason why this market wouldn't want to turn all the way back. So the intention is not to catch the low of the market. The intention is to trade with the overall momentum of the market. And as you guys can see, the momentum of this particular market is clearly very bearish. So with that being said, let's jump over to our final pair, and then we can conclude our midweek review from there. Okay, guys. So this is the dollar yen. Now, for those of you that watched our live trade yesterday, you would see that I've actually taken a position on the dollar yen. But this was one of those short term positions. So I'm not looking to swing the market or trade any significant reversals. But if I go over into the daily time frame, I'll be able to explain my reasoning behind my entry. This was a very strong resistance zone over here. And with this being a very strong resistance zone, when the market broke out of this so aggressively, then I definitely suspected that there is the potential of the market wanting to run even further up. Now, how far up? I would see the market running to potentially all the way up to 10900. Now, as you guys can see, we're not too far from that level over there. We do have a little bit of work to do, but I have since yesterday moved to break even, so all risk is off the table. I had three positions in, and I managed to close two off, and now finally running the third and final one all the way to our target of 10900. So, guys, what I'm trying to share with you is that although we're trading the overall direction of the market, there are still intraday opportunities, and that is what I look for. And with regards to this particular pair, I still have a very bearish bias on this pair. However, with a bias that is attached to this pair, I don't actually see any significant reversals anytime soon. However, in all honesty, I'm literally just looking for the market to run to 109. Once this trade is closed, then I'm no longer concerned about what's the intraday performance of this position until we have more information. For now, this is a very choppy pair, and I'm not necessarily sure how to look at it from a swing trader's perspective or a holistic perspective. But from a day trading perspective, there was an opportunity. I seized the opportunity, I took the position, and now we're running to our third and final target. But that will conclude it for our midweek review, guys. And as you can see, although we didn't get the retracements that we anticipated, although we didn't get the exact way the market moved accurately, you can see that we had a very, very strong outlook in terms of our ability to anticipate the market's direction for this week. So far, it's been really good. There's been a lot of good positions that was taken. There's been a lot of losses that was incurred, but also bear in mind that when we lose very small into comparison to how much we stand to gain. So essentially, this is what we're looking to build on. This is the momentum we're trying to continue running forward. And essentially, this is how we're going to look to trade in the coming for the rest of the week. So, with that all being said, guys, I really appreciate you taking the time to watch this midweek review. If you have any questions, please feel free to drop them in the comments below. If you have anything you would like to add, please feel free to do so as well. And if you haven't subscribed, considering hitting that subscribe button, and you will be able to get notifications of all the new content that we upload. But I do hope that you have an awesome week further, and I look forward to chatting to you all soon. Cheers and bye for now.